Hi everyone, this is Alan Rosinski of Metro Manhattan Office Space. Good afternoon. In today's episode, I wanted to talk about some useful negotiating tactics and strategies when it comes to dealing with landlords in New York City. Maybe you're planning to move to a new space. Maybe you'd like to open a second location. To preface this topic, let's agree on something. If you're a medium or smaller size business, your two biggest expenses are going to be your employees and your monthly rent. In some dire situations, like what we've seen during the pandemic, you may be able to reduce your staff to ease your financial burden, but there is no easy way out when it comes to paying rent. So you best think through the affordability of a potential space before you sign a lease. Now, as everyone knows, there are two sides to any real estate negotiation, but regardless of what you may have heard, those two sides are rarely equal. And just like life, negotiation for office space isn't always going to be fair. Now, first things first, how much negotiation leverage do you really have with a landlord? This is important. Imagine that you're approaching a large manufacturing company to purchase a small number of inexpensive items, say widgets. How important do you think you will be to that company as a customer? In all likelihood, you will end up at the back of the line. On the other hand, if you're placing orders by the millions for widgets, that company will be at your beck and call to satisfy your demands and make sure that you have a great experience. For better or worse, commercial real estate works the same way. If you're looking for 1,000 square feet in a 150,000 square foot property, how much do you really think a landlord is going to bend to your wishes? The reality is the more space you rent, the more money you can bring to the landlord's bottom line, and the more powerful your side of the negotiations will become. On the flip side, the larger the landlord and the more desirable the location, the more power your landlord will retain when negotiating the terms of your commercial lease. Now let's talk about base rent. Most landlords try to maximize what's called their net operating income to debt ratio, which in plain English means the amount of net rent income to be applied to the principal and interest payments made on their mortgage loans. Your landlord wants the most, and you want to pay the least for base rent. This is where the market comes in. Brokerage firms such as Metro Manhattan Office Space that specialize in representing commercial tenants will increase your chances of negotiating favorable business terms. A knowledgeable broker should expose you to every property on the market that meets your search criteria. This is going to give you negotiating leverage and make your search efficient. If you're trying to bargain down your landlord to $55 a square foot, but asking rents for similar properties in the area are $60 per square foot, this will naturally make your negotiation challenging. Your offer is unlikely to be accepted unless you offer some compelling incentive to the landlord to reduce the rent. Such incentives can be taking the space in as-is condition, offering a longer lease term, and/or offering the landlord a tenant with extremely strong financials. Now let's discuss additional rent. It should be obvious to most tenants that all landlords of commercial office space in New York City try to operate their buildings in a profitable manner. These are businesses after all. Therefore, additional rent items like paying tax increases, insurance increases, and a percentage of common area maintenance costs are going to often be standard commercial tenant rent expenses. In negotiating these items, you want to make sure that the percentage you pay is equivalent to the percentage of space you are taking in the property. It might behoove you, depending on the size of the rental and your available funds, to confirm the actual percentage of space that you'll be taking. It isn't unheard of for landlords to exaggerate these percentages. Let's talk about the lease term. Traditionally, office landlords in New York City have preferred long-term leases of 3, 5, or even 10 years. When a landlord has the opportunity to get a desirable tenant in their building, such as a tenant who can easily fulfill their financial obligations on a long-term basis, they'll want to keep that tenant for as long as possible. The first reason is obvious, to ensure cash flow. But secondly, because banks prefer longer-term leases when they're lending money, and part of their loan underwriting, the determination of how much to lend, is based on the lease term. What's changed in 2021 is that many landlords are now highly motivated to fill vacant spaces left behind by companies that have downsized, relocated, or gone remote. This means that landlords might be more open to shorter-term leases. They may have required a 5 to 10-year lease previously, and now they'll consider a 3 to 5-year lease term. This opens up opportunities for startups and businesses in the early stages of growth. Now, if you require a short-term lease because your business is growing, it would benefit you to look for a building where you can expand prior to your lease expiring. Usually, New York City landlords will accommodate tenants that have outgrown their space. They usually just tear up their leases and move them to a larger unit. In this day and age, most landlords have enough vacancies in their buildings to accommodate companies that are outgrowing their space. I mean, they're going to be delighted if you take a larger space in their building, provided you have a good relationship with them. Now, let's talk about good guy clauses. A good guy guarantee is a limited personal guarantee. An individual is guaranteeing that the tenant, which is the company, will pay the rent while they occupy the space. So if the tenant breaks the lease, they must be current on the rent at the time they vacate the space. They must return the keys to the landlord and leave the space broom clean. They usually have to provide the landlord with a few months' notice beforehand so the landlord has time to relet the space. If these conditions are met, the obligation of the good guy guarantor ends. They don't owe the landlord anything. Let's talk about tenant improvement allowances and build-outs. When you sign a new office space lease in New York City, you may want to take the space in as-is condition and you do the work. Or even better yet, you may get the landlord to perform the improvements. That's always the best from a tenant perspective. Now, if your landlord builds out the space on your behalf, it may end up translating into a somewhat higher rent. But landlords are more flexible in this day and age, and they're motivated to try to get a good tenant in the space and do work for them. If your landlord upgrades or renovates a space on your behalf, you should really provide them with a very detailed description of what you want in your offer so it can be negotiated. If your lease agreement has you building out the space, the landlord will probably give you, or what is negotiable is something called TI, a tenant improvement allowance, where the landlord's going to write you a check to reimburse you for work that you do. Now, when you're negotiating TI, you should have your broker go into detail with your broker on what you need done, what the costs are, and they can request a certain amount of TI from the landlord. Now, if you take a space in as-is condition and you're doing the improvements, you're going to have certain requirements. You're going to have to hire a licensed insured contractor. You're going to have to get approval for any work, and you're going to need to provide the landlord with lien sign-offs. Furthermore, you're going to be responsible for applying for any permits to alter your space, and keep in mind that you're going to have to hire an architect, and there's a certain cost involved to that. Finally, let's talk about rent abatements and escalations. There's usually an abatement clause in a commercial lease, which in plain English means that if there's a fire or other damage to the property, your lease payments will be temporarily reduced in proportion to the amount of space that's still usable. After our recent experience with the pandemic, it's really helpful if your broker can get the landlord to add government shutdowns to the events which would trigger a rent abatement. But don't consider it guaranteed that the landlord will agree. This type of language is especially important for restaurants, spas, fitness centers, and similar businesses that rely on heavy foot traffic in order to stay profitable. I mentioned that a landlord wants to keep their buildings operating at a profit. And besides additional rent items, they want the value of rent to increase every year so it keeps up with inflation. After all, every year their costs to operate a building increase. So you can expect your rent to increase approximately 3% a year. You can try to get it down. Maybe you can succeed in getting a landlord to agree to 2.5%. Most landlords are generally pragmatic business people, and you can strike a reasonable deal with them as long as you show diligence, serious intent, have good financials, and your use conforms with their buildings. They're running a business like you are, and they're going to reject any overly unfavorable terms the same way that you would. Having an experienced broker representing you will help protect your interests and improve the likelihood of you negotiating good lease terms. I hope that you found all this information helpful. If you have any questions, stories, or comments of your own when it comes to negotiating with landlords or tenants if you're a landlord yourself, please feel free to share them below. If you found this content interesting or helpful, I'd be happy if you subscribe to my YouTube channel. You can always find me on Twitter. My Twitter handle is @Metro Manhattan. Until the next time.